Hey everybody, it's Jeremy here with the Gillette Group, and today I'm going to be giving you the November market update for Southwest Florida. Now, the background behind me is a little bit different because we just purchased in North Carolina. We're up here just after Thanksgiving, doing a little bit of work on the unit itself, but make sure you check out this video to learn what's happening in the market in Southwest Florida. All right, well, let's go ahead and dig in. We're going to just kind of freeform this a little bit. I'm actually in our MLS, so these are real-time stats. And there's a couple things that I look at here that I want to make sure that we highlight when we do these monthly updates. So I'm going to zoom in a little bit, and we're going to go to, this information here, this Market Watch data. And there's a couple of things that I look for. So this is actually the past 7 days, but I can share with you this is pretty representative of what we saw throughout the month of November. When we look here, we see the new listings. In this case, there were 574 new listings, and then we had 421 sold listings. So this gap here would suggest that we're getting a little more inventory, which is good. So we have more inventory coming to market. That does give a little more option as it relates to your home search. The solds is still very healthy, though. You know, it is within what, 20% roughly of the new listings. So more importantly, when I look down here, there's this pending list. So in the same 7-day period, we had almost as many homes. 574 came on the market. Another 570 went pending. Now, not all of these will close, which is partly why we see here there's a little bit of a reduction. Sometimes we have an issue with inspection. Sometimes there's an issue with financing. Sometimes the buyers just get cold feet. So not every home that goes pending will close, but this is suggestive that the demand continues to remain to be strong in Southwest Florida. As you guys know, real estate is very local, and contrary to maybe what you're seeing on the news and the national headlines, we are not seeing a precipitous kind of drop, and nor do we expect one. There is no doubt the equity markets being down, 20 to 30% is having an effect on many buyers. People aren't looking to pull their money out. They want it to kind of rebound before they do so. And conversely, the interest rates hovering, well, now they're about 6.6%, but they were as high as 7.25%, in November. And the Fed is signaling another rate increase in December and then again in Q1. There is some suggestion that maybe it'll be a half basis point instead of 0.75, which, I would think would be received more favorably from the markets. But we are seeing a little bit of a reduction in the interest rates, which is a good thing. But regardless, what we're seeing here, again, locally in Southwest Florida, is that our demand is basically on par with our inventory. So we continue to be really low on inventory. It doesn't feel like a seller's market, but it is. I think I say that because we all have a little bit of a, muscle memory when it comes to thinking back to the past year to 2 years. That was a completely lopsided seller's market. There was just crushing demand against the inventory that we had. As a seller, you're in a position to basically control all the terms of your contract. You could have a lease back at no charge. You are clearly in the driver's seat. And to a degree, you still are as a seller. There remains low inventory. Some of that is, frankly, an effect of Ian. There were a lot of homes in Lee County and Charlotte County, less so in Collier County, that were damaged, and that we have people that are displaced. So there continues to be, as we come into season, we're seeing a lot of people now that are looking, that want to get back in the market. They see this potentially as an opportunity where the prices have, and they haven't really dropped. I would say that they've stabilized, and you'll see that kind of in the next chart. So let's go ahead and look down here. This is another one of the charts that I like to look at. In fact, we're going to go to a bigger screen so we can see this. And I'm going to just look at single family homes first. And I think you'll get some good information here. You can see the trend from the past few years, and obviously it's been a really high rise. So what we're looking at here is the, I don't know if it's median or average sales price, median sales price for the whole Bonita Estero market. And this is really the range that I want to look at here. So customers are asking us all the time, what's going on in the market? What's worst case scenario? How much do you think it might drop? And of course, none of us have a crystal ball, but when we look at the data that we have available to us and just some of the, kind of having our finger on a pulse, we don't anticipate we're going to see some major drop. Now, could there be? Of course, there could be. There could be some major macro event that none of us can predict. The Feds can continue to raise, which maybe will have a bigger impact. But for everything that we're seeing, and again, specifically within Southwest Florida, we don't see a big drop coming. And when you look at this data, I'll share with you where we've been. So when you look at kind of the February, March timeframe, we're in the call it 75, 680 as the median price point. And if you look here, we're in the same boat. So when we get to September and we get to October, so we're effectively flat from February to March. What we saw was the peak in May, and then it started to soften a little bit. But when we talk about, are we down? I suppose, yes. Can you say we're down from the peak? Of course. But when you look at where we were February, March of earlier this year, we're basically flat to where we were earlier this year. So, there's not some huge drop. We definitely saw the peak, and then this is kind of where we're starting to stabilize. If we look at condos, you're going to see it's a very similar trend. So, as we come into February, March, we're in the, call it 400, maybe 415, 410, and we're right there again at 405. So, the high rise and then, a little bit of a drop here. But again, pretty flat. Now, as this relates, anyone that's owned their home for more than a year or 2 years, they're sitting on a lot of equity. So, even if the market was to change, we're not looking at the type of loan products that were in the market in 2006 to 2008. Not to mention, most people are going to have 30, 40, 50+% equity in the home and the value. So we don't anticipate we're going to see some rash of foreclosures and short sales. There's just too much equity in these homes. And again, that's condos, but it's the same here for single family. So if you bought in, prior to the pandemic, let's just say January of 2020 at 400, your house, roughly speaking, is now worth 670,000. So, there's equity in these homes. When we look at this, again, we don't see some precipitous drop coming. There is a lot of demand. There's a lot of people that are in the area now that, quite frankly, are here to assist with the rebuild. Those folks are looking for places. So when we look at our rental market, there's a strong demand in our rental market. We have, portions of our area that were more severely impacted by Ian than others. Some behaviors that we're seeing that have changed as a result of that. We're seeing a desire for people to move a little bit more east. There were a lot of folks that thought they wanted to be on the Gulf. And now some of the conversations we're having, it's like, they're looking east of 41 or east of 75. Looking for highly amenitized communities that have maybe a lake view as opposed to a Gulf view. So definitely some changes in the market. We don't see anything crazy coming. More broadly, we see in Collier County about a 1% reduction a month in value. We've been tracking somewhat similar, but again, it's kind of hard to say. We had this huge run up and then we had the peak in the May-June timeframe. We're basically flat, versus where we were 6 months ago. That's pretty healthy. When we look at incoming inventory versus what's going out, it's very balanced, which also is pretty healthy. Overall, when we go neighborhood by neighborhood, we live off of Corkscrew, and we kind of look at the Corkscrew corridor as our home turf. When we look at these communities, many of them have 3, 2, 5, 6 houses for sale. That's not a lot. When you're in a neighborhood that has 1,000 homes, the average American moves every 5 years. So if you think about the number of homes, that should be on the market with your typical market time, it should be significantly more than that. So, we're hopeful we're going to continue to see inventory come to market. We're coming into season. So it's expected that we're going to have some folks that will put it on in the hopes that as our population increases, that we'll get some benefit from that. I can talk you through that from a seller perspective, when the right time is to go on the market. And then, there's a lot of people that enjoy, kind of their one last season and then they'll list it. So we would anticipate potentially some more inventory that will come on in the spring. But all in all, very balanced market. We're seeing, like I said, inventory coming in and inventory going out is pretty balanced. Overall, we're still pretty light. So as crazy as it sounds, like we're in a little bit of a seller's market here. It is not frenetic like it was a year ago. You're not going to put your house on the market. It's going to sell in a day and you're going to have 6 offers to choose from. It does take a little more marketing effort, but we're still continuing to see great prices, and to be where we were 6 months ago, and in light of what we're seeing in other parts of the country, that's a pretty good place to be. All right, well, I hope you found this information helpful. The market is pretty dynamic and probably different than what you might be hearing on the news itself. So anytime you have questions, please make sure you reach out to us. You can call us at 239-776-6872. We're on social media. Of course, you can drop a comment in the comments below. But anytime you have a question, make sure you reach out to us, and look forward to talking to you guys real soon.